All right, let's get started. Welcome, everyone. Thanks for joining our webinar today on money conversations with Gen Z and Millennials. This is going to be a quick hit kind of speed round conversation between Katrina, Noelle, and myself based on insights from our Future of Money study and some qualitative interviews that we did as well. And we'll be sharing insights for about 20 minutes. So we welcome questions. So drop those questions in the chat for us, and we might take them as we go, but we definitely have room at the end for questions as well. So I'm Lilah Raynor. I'm CEO of Logica Research, and we are a custom insights company. We focus on helping organizations get the insights they need to improve people's financial lives. And I'm here with Katrina Noelle of Know Research. She is a qualitative partner of ours and had joined in 2020 doing some interviews to supplement and bring human stories to life for our Future of Money study during COVID. Katrina.
Thank you so much for having us as part of the study and having me here today. Financial services is a big pillar at Know Research as well. So the collaboration between Logica and Know on this and all kinds of other work has just been completely fulfilling, and happy to help.
Yeah, so as we go through here, I'm going to ground us all in the methodology for the study. And I do want to say the Future of Money study is a study that Logica has been doing since 2017. We've done it twice a year. And actually in 2020, we did a couple extra waves as well. But it's an online study of about 12 minutes. It's in the US, and it's based on really understanding the consumer mindset around how people spend, save, and invest money. And the base sample is 1,000 US adults, general population. They're balanced on age, gender, income, and generation. And then since 2017, actually, we've been doing an augment of 200 Gen Zers, and they're older Gen Zers in the sense that they're on the upper end of Gen Z, 16 to 25. I also want to mention that the millennial age range that we're using is based on Pew definition of generations and is 26 to 41. So today we're going to be talking about some similarities and some differences between Gen Z and millennials. The full study has all the generations in it. And the study was fielded in April of this year. And just to kind of remind everybody, definitely market volatility going on at that time, but it also was before the interest rate hike. So I'm going to do a little bit of plug for our Future of Money Insights Kit here, because what's new this year is we've taken our Future of Money study and we've launched it as a product. So as an Insights Kit purchaser, you get that research report that's delivered 2 times a year. We just did the spring wave. We have data tables that look at a bunch of different subgroups. You have access to analysts where you can ask custom questions. You can even ask your own custom question in each wave of the study, and then we do the full presentation internally. So today we've pulled out select insights from that study to ground our conversation, and then also sharing with you actual conversations with Gen Zers and millennials that Katrina and I conducted. One of the core questions that we ask in our study that helps just set the stage and context for what we learn each time is this question about where technology will impact people's financial lives. And on the left here, you see Gen Z. That top line that's really fluctuating a lot since 2020 is related to work. So, I mentioned we look at how people make money, spend it, save it, and invest it. And so for Gen Z, work has really changed a lot during the last couple of years during COVID. But on the right, you see that work lines kind of come down for millennials, but that gray line, which is about investing, that's really kind of spiking during COVID. And that's partly what we're going to be talking about today.
Yes, and I think we learned so much about how both of these generations are saving and investing and how those lines could be sort of blurry for them. But I'd love to hear a little bit more about this idea of millennials not saving as much, even though that investing line is going up on that previous slide. So what were the main differences, Lilah, that you noticed in terms of savings first?
Yeah, so It's really, I don't know, I love this younger generation. I'm a parent of two Gen Zers, and I think we've talked about before in prior webinars just how resourceful and scrappy they are. And they are focused on saving. So they are saving more due to market volatility. They're also the most driven generation to save for the future right now. And I think what we saw with this generation is that during COVID, they had the opportunity to save more because they were spending less. And they also, some of them were getting unemployment and extra supplemental income and were able to stash that away. And that might carry through for this generation. I think, the changes that happened during COVID for them is really starting to define this generation a lot. And then for millennials, they're still saving more due to market volatility. They're also driven to save for the future, just not quite as much. And that's understandable given where they are in the life stage. They have more demands on their money, but also we'll see that, maybe they're investing more versus saving.
Yeah, and I think that's where those blurry lines may be. We spoke to a lot of folks, and you'll hear from a couple of them today, where what some of us in the other generations may think of an investment move is also a money-making move on a shorter term than maybe we would acknowledge that those vehicles are being used for. So yeah, we heard a lot about this investment activity as well. Yeah.
Yeah, so they're pretty similar in some ways in that they both are investing more specifically in stocks due to market volatility. We see here that millennials are investing the most in crypto right now. We're going to talk about crypto a little bit more. And what I find really fascinating here is, like, we all know that a lot of new investors were born during COVID, and that's just really especially true for Gen Z, but they're really investing earlier than millennials were in their lives, right? So now Gen Zers are investing as teenagers and in college, whereas millennials maybe started investing more because they had their first 401k, though both generations are investing more because of COVID. And so we'll share with you here a video that shows actual conversations with Gen Zers and millennials. So here we go.
Our economy is not getting any better, and inflation is insane. And I don't even see myself ever owning a home, or these things that used to be part of life. I would even say milestones in your life. That doesn't really exist.
I'd say I'm still kind of on a long-term game to try to hold it and hope that it goes back up. But I'm definitely cognizant of the market and know that this is kind of the first downturn I've seen. Given when I started investing, it's just been kind of a growth market and everything has been going up. So I think definitely I see the downturn and kind of try not to look at my accounts too much because it's a bit sad.
If I do make any money off of just one specific, investment, it's only, let's say, a $10 to $15 gain. I have invested in stocks as well, and I did put 35 cents into the account, and I withdrew $45 a month and a half later. Yeah, so that was my biggest one so far. I've been doing pretty good.
So I think, Katrina, one of the things that we heard is this, it's a little bit of a dichotomy. It's people who are really investing for the short term, like this gentleman here, and people who are investing for the long term. And they have these different buckets of money maybe that they're thinking about. The younger generations do have the luxury and privilege of time to do more experimental investing, and they are doing that, but they're also just trying to figure out, how do they track all these different places that they're investing. One of the things that we heard in the interviews too is that, and probably not surprising to anybody on the phone, is that they are responding to promotions, for example, on opening investing accounts or getting a free stock, and that's getting them entered into the market, but then they may have these different places that they have money and trying to manage that. And really, next step is going to be to become more, educated and sophisticated on how to invest and have tools to do that.
Yeah, the
Our-
last wave of this study, we were talking about how they're scrappy, right? And trying all of these methods. But to your point, Lilah, then what do they do? And I think that's really a nice segue to this idea of where they get advice from on financial matters, and that those sources are really quite different for both generations.
Yeah, they really are. So we have seen the last several waves of our study that there really are top three, main sources for advice, and they're showing up here in different orders, but they're professional advisors, they're financial companies or institutions, and their family and friends. And this last wave, we collected a lot more information in terms of, does that advice channel really differ, whether it's budgeting or retirement planning or investing? And what we found is that it's really pretty similar across all these different places. They want advice. And so when you kind of boil it up, what you see is the top three are similar across generations, but for Gen Z, it's really number one is about going to family and friends and getting that investing and budgeting and financial advice from family and friends. And that's about double of professional advisors and financial institutions. And maybe you'll say, okay, well, that's maybe not surprising because they're young and they have a lot of friends, we talk to them. But I think what's different about this generation is that's happening on social media. And I don't think it's going to go away when they get older. It's just going to maybe take a different shape. Whereas millennials, we've just historically seen, and it's showing up here, that they do actually tend to be a bit more traditional in some ways and a bit more like their boomer parents. And they're going to professional financial advisors and financial companies first, and then more to their family and friends. All of them are, resourcing and sourcing these different places and having judgment about who to go to for what. But Gen Z, I would say, is really, that's sort of scrappy and resourceful, where they're able to process a lot of different sources of information and figure out what they want to pay attention to. You're on mute, Katrina.
Yes, in a non-Gen Z way, finding my mute button. It's my generational problem. Yes, and I think, if we think about what they're looking for advice on and help with, that varies slightly, but really we heard a lot about what channel they're getting this advice from, because it's all well and good to say friends and family, but what links are being shared, what resources are being tapped into to get advice on all of these areas, which was something I was personally curious about. I feel a little out of it on that front. So what should we be doing?
Yeah, it's interesting. And I know like probably folks are looking at, it says YouTube here. And I do want to say, like, if anybody has teenagers, teenagers, they're on YouTube all the time. So it is actually showing up here as the number one place that Gen Zers go to for financial advice on all these different topics: retirement, savings, debt, investments. And then millennials are more likely, again, that sort of a little bit more traditional. They want that more personal attention, the one-on-one in-person meetings. They are also using do-it-yourself apps, easy to use apps, and that is important. And that's something, again, that we've seen over time, just having that tool integration for them. But it is different. And this is one of the main differences that we see. Now, I kind of am anticipating there's a question about, well, where does TikTok show up on this list? And for Gen Z, TikTok is in that 15 to 25% range for Gen Z, and it's more like 10% for millennials. But absolutely, Gen Z is going to social media. They are on YouTube for advice, for financial advice, like they're on YouTube for everything else, and kind of getting this encyclopedic knowledge of different topic areas, and financial advice is really no different. So let's look again at what they tell us in our conversations.
So from especially like the social channels like YouTube, TikTok, if I'm trusting anything from them, I usually need to follow them for at least some period of time, probably longer than a few months, just so I can kind of see what their general attitude and like is towards things. I usually try to follow people that are pretty transparent with their investments and how they do. So then I can also see how they've been doing based off the decisions they made, based off what reasoning.
I don't like having like too much going on in regards to like my money or my cards or whatever it may be. And I know some people don't mind having like multiple credit cards or multiple different like banking related stuff. And I'm someone who's like, I have one bank, I have 2 credit cards, and that's pretty much where I'm capping it out. I don't do a whole lot of exploratory stuff where I'm constantly like handing over my information to like some sort of random app.
So I think we're hearing a couple different things here. So one is what I was talking about earlier is just, you know, all of these different sources of information and social media. And the gentleman said, you know, having trusted sources there, it's just because they're on social media doesn't mean they're not paying attention to whether they can trust those people. And I think you pointed that out, Katrina, as well, when we were talking about what we heard. And the woman here who was also talking about like, there's just too much, she wants to simplify. And I think that's where we're going to start seeing where these generations really need help. They're using multiple apps. If they responded to promotions, they have these multiple accounts and multiple apps as well. And they're trying to integrate and synthesize them. And they're also trying to figure out who they trust and who they go to for what.
And on that note, Lilah, we just got a question in from Molly. Thank you, Molly, about kind of who to trust. And if you're thinking about going to a professional, you know, for advice, did we see more traditional sources of that, like a Schwab or, you know, an organization like that, or some of the newer entities like Robinhood? I mean, I think anecdotally from the interviews, we heard the full spectrum of things, but was there anything you wanted to speak to on that before we go to the next section?
Yeah, that's a great question. Thanks, Molly. So I think we heard more traditional for, you know, financial advice overall. So we heard that actually both those names, interestingly, come up, both those firm names, Schwab and Robinhood. And I think we're hearing people view them differently in terms of, you know, Robinhood for trading and specific stocks, you know, stocks of the day, whereas Schwab is that more traditional. I also want to mention that while we aren't showing it here, we've seen in prior waves and in our full report, there's more information about this, is just the importance of employers as well as a source of advice. And, you know, as you think about reaching these younger generations, think about, you know, how they're showing up as participants in the 401k plans and helping them there as well. And as employers, how can you help these younger generations manage their money as well?
Yeah, and I think we're seeing an interesting fusion between, we had an interview participant whose friend worked at Schwab. So is that a traditional financial advice resource, or is that friends and family? Like there is also sort of some blur lines there. And I think when we go into the next section on crypto, that carries through that idea of there is this interchange of ideas, there is sharing, there is trying to figure out to get into this thing, are you going to catch the crypto bug or not? And so we saw a lot of differences in terms of both sources of information and actually activity in crypto as well.
So let's look at that next here. And I think, you know, you're absolutely right. I think the key theme here is, especially for Gen Zers where they're looking for family and friends, I just want to follow up on that, which is that they're linking that to these financial institutions and to financial professionals, and that word of mouth and reputation is maybe more important than ever. And it's going to come from their social network, as well as, you know, what might be more historical, traditional, their parents, as well as their employer. So let's talk about crypto. These two generations are very enthusiastic about crypto, millennials even more so. We saw that millennials are the most likely to be investing in crypto. And when we asked about different ways our people are open to crypto, and millennials are higher kind of across the board. But I think, Katrina, as you pointed out, Gen Z is catching up. So they're likely to own crypto in the next 5 years. They're interested in getting paid in crypto. They are interested in being able to invest in crypto in their 401k, which I realize may make people a little bit worried to think about that. And they're open to paying with crypto as well. So I think for these generations, crypto is here to stay. It's just more a matter of how do they think about it in their investing portfolios? How do they think about it? If they get paid back with Venmo and they have crypto sitting in their Venmo account, what does that valuation mean? What's going to change? They're going to need help, but they are really, in a sense, committed to it, open to it, and are expecting that it's going to be a part of their financial lives in the future for sure. So again, let's hear what they have to say about crypto.
For whatever reason, I've got the crypto bug. I've been willing to tolerate greater risk with the hope of greater return. Yet to be seen these days. But from an investment perspective, I think we're a long way away from it drastically changing how people transact. I buy somewhat into the long-term proposition of like store value for Bitcoin, but again, I think that's well off. At least at this phase, I think it's just an investment.
I invest in the stock market there, and I have like a little bit of Bitcoin. I don't really know anything about it. I just got it because I was like, I guess I should get a little bit of this. I don't have much of the Bitcoin, but I just hear about it and how it's, cryptocurrency is just like really, becoming a really popular thing. So I'm like, if I'm investing, I should invest into a little bit of this because I feel like, one day maybe that could make me money since all this cryptocurrency is becoming very popular.
Exactly. I think that I love that. I got to get a little bit of this. Like, I don't know what it is. And I think, Lilah, to your point, the idea that it's coming, that digital currency is the next step was, at least with the folks we talked to, a given, an inevitable, the way things are going. So regardless of how they feel about if they are personally using it, investing in it, and how much they know personally that this is kind of the future of the way the world is going, according to these generations.
Yeah, and we talked to a range of people, and it was, I think, almost 2 a person they owned crypto, and in these Gen Z and millennial group. And with that range where you see, some people are really thinking about it in a more complex way, and other people are just experimenting but feel like they should. And someone put in the chat, social norming. Exactly. There is definitely, in general investing in crypto, there's this FOMO that's going on that we see show up in the research as well. So
I just got informed that we do have a Twitter direct message question that I'm going to use to tee you up, because they have the same question that you're about to answer, which is nice, about what the findings mean for communicating with Gen Z and how that's different from other generations. So I think when we think about these key questions, like, are these questions to ask overall, or are they kind of specifically to one of these generations or the other, I think is the question.
Yeah, so we do have 3 key questions. We wanted to answer some questions for you here, but also tee up some more. If you can see, my backdrop questions are the answer. So we're researchers, and we're going to recommend some of the things that you should be looking at strategically, but also to do research for your own audiences and markets. But the first key question is, do you have the messages and channels to meet these generations where they are? Gen Z is going to be, you're going to need to communicate with them in a different way from millennials. You need to understand them. You need to know them. They are on social media. That might seem kind of obvious, but then specifically where they are and where is your market? Are they on TikTok? Are they on YouTube? How are they using each of these channels? How are they leveraging their friends and networks to get the information? So we showed you clips from 2 different women who actually were our best friends. And when I was interviewing them, they said basically, one of them invested in crypto because the other one had, and she was just going to follow her friend's investing advice. And I think that's, partly what you're going to see with this generation. And you're going to have a range of people who are going to be more, spending more time figuring out who to trust and who to follow. But they're a smart, clever generation, and they're going to pay attention to authentic, real messages from people who know what they're talking about. The second is, do you have the products and services that are integrated in a way that meet their needs? And in this way, maybe the generations are a bit more similar than, perhaps how you communicate with them and what channels you're on. But they are both going to need tools to kind of consolidate, integrate all the different accounts that they have, or how to manage their money. If you can imagine, you've got a few different gig jobs that you're doing, different sources of income coming in. Maybe you decided, maybe someone's paying you in crypto. Then you have all these different investment accounts that you have because you opened them up in different ways. Then you're paying attention to different social media followers and so on. And you're going to need help trying to figure out what you pay attention to, how you consolidate your money, how you use your bank account, for example, versus your investment account. So not just from an education way, but from a tool perspective. And then finally, what are you doing with crypto? So if you're not doing anything, that should be a strategic decision and communicated in a way that is going to make sense to these generations, and focus on what you do well, and have a meaningful conversation with the generations on what you're not doing with crypto. But if you're going to want to meet these generations where they are, especially millennials around crypto, you're going to really need to understand what they need and how it integrates with the rest of your product and service offering. So it looks like we have another question come in there.
Yeah, and it's back to it's regarding crypto and the idea that, did we hear about a tie-in with political attitudes and the response to financial policy, like hedging against inflation? I think my one note on that is, remember, this was April, so I feel like we all felt quite differently about crypto and inflation in April. Lilah and I thought we would stop saying it feels so long away that we conducted these interviews after the pandemic, but that's still a lot happened. But I don't know, Lilah, any kind of other notes about anything that may have come out of the data about that?
Yeah, so we have the quantitative data, and then we have the interviews that we're talking about today. And in the full Future of Money study, we actually, it's a great plug again for the Insights Kit, because we do have a special section on crypto. We also asked a series of questions on both inflation and market volatility, and some of the ones that we shared here that show those generational differences. Interestingly enough, this audience really didn't seem to be differentiating between market volatility and inflation. So we're focusing on market volatility here in their decision. They didn't seem to be able to, they're not really doing anything differently based on inflation than they are based on market volatility. And I would say, to answer this question, that's probably true in general, that certainly there are some people who are taking that more nuanced approach and more sophisticated approach, but mostly what we are seeing in the data and what we heard in our interviews is they're not taking that kind of complex approach to it. Not this audience. Do they need help doing that? Yes, they also need help just even understanding how to think about the value of crypto relative to the dollar and some like basic sort of economics and financial fundamentals as well.
Yeah, I think that the quickly played is not an outlier of, I think I should get into this thing, but I'm not sure much about it. And so I think it comes back to education. It comes back to informing, not only throwing products and services at them, but really informing them and being there to answer some of these questions that they may not even know they have about some of these.
Yes. Yeah. I think we'll see more of those questions, right, come up as the market changes, as the landscape changes as well. So I know we're at time, and these have been great questions. I love them. And if you have any other questions, you can email us as well. And again, please, if you want the full report where we go into a lot more detail looking at generational differences, please email us about the insights kit as well. And thank you, everybody.
Thanks all.